Hello, everyone. Let's have a good week. Let's take a look around here. I want to start off with the Euro. Hi, Paul, Shahab, Galaxy, Didier. How are you? Hi, Brock, Kevin. Everyone doing okay? All right. So let me just do this here. Start video. Okay. So I showed this Friday. This rising wedge, and we were here, and it accelerated to the downside here as the day progressed. And last week, I was talking about, be careful about getting too bared up on the dollar. Blake said the same thing. I showed this third drive developing. Even before it got there, I thought we'd have one more low before we go. And I think that last week may have been an inflection point. I know a lot of people are looking for maybe 1920, 1880, and then the resumption of the dollar bear market, and I think it could be turn out to be much more of an inflection point. All right, and look at this. I've been talking about this forever. Look at the S&Ps this morning. Pretty nice candle. Almost looks like we're going to blow to new highs. And Nasdaq weak, still weak. Okay, so it's possible that Nasdaq did top. I mean, if the S&Ps can rally to 4,300, of course, we'll see 14.2, 14.3 in Nasdaq. So it's going to be interesting to see what the S&Ps can do if they could rally to new highs. I mean, right now this could still be a failing rally in the S&Ps where we came off pretty good. I'll tell you something though, when I look at the 4-hour chart here, back under last week's lows of 41.75 is going to be a pretty negative action. It's going to be a tell that at least some type of correction is underway to maybe head back towards 40.70. All right, but I think it hasn't been proved yet. But I think that this turn that we had in the dollar may be a little bit more significant than a lot of people are thinking. And I think you have to buy it anywhere. I mean, a good area would be 90.90, 90.80. That's where the 2-week off number is this week. It's underneath the dollar index and the euro. Let's see what we need for a 2-week reversal. You know, when you have a week like that, see the red candle on the week. I think it's significant. Kind of, it was even more negative than this reversal candle because the body was bigger in red and at the highs. But I do agree there's a lot of stuff here at the 1920 level, 1950 level, and we're going to see that where we're converging on the daily here. So if short, this is going to be a good area to, be taking at least partials down here at 19 and a half or so in the area. I do believe if we start taking this out, that this could be challenged. And like I said, long term, I think this pink line may come into play. So anyway, I think there's a chance for 95 in the Dixie. I reserve the right to change my mind because I take to heart W.D. Gann's expression of if you don't learn how to change your mind, you won't have any change left. But I think potentially this could be a pretty good break over the next several weeks. The grand prize, I mean, there's plenty of stops. You ever look at a chart and say, where are the stops? Okay, so when we had a third drive, they took out a lot of stops on this formation above the market, and now they're starting to liquidate people here under 120. This is going to be a big area too, 19 and a half, and this is going to be a big area too, 1930. Uh, the grand prize is going to be all the way down at the 116 level, and we'll see. I look at this wedge, and if you believe in wedges, and if it turns out to really be a wedge, normally they retrace 100% of the move, and that could take you down towards the low 117 handle. So I think one of the most important things the market did last week was a turning point in the dollar. Hard for me to believe, although it's done it before, is that we're going to have a continuation of risk, especially maybe during the first wave in the dollar. But it's hard for me to believe that the Dixie could be 90, 95 in the next several weeks or a few months, and the S&Ps are still at 4,200. That would surprise me. So relative weakness is still NASDAQ. It's going to take a lot of real big strength, more than most likely just new highs in the S&Ps over 4220 to drag the NASDAQ back up to new highs. Okay, any questions? Okay. It was a monster, yes, okay. Congratulations on the cable short. Although I have to say it's not, you weren't the only one short, and it's not your pound, it's everyone's pound. We think my pound. All right. So, I'm gonna bring in the team now. I have Larry Tentarelli with me, with us at the bottom of the hour. Larry made a pretty good call. He's been a bull for a long time. And when we were trading down here, figure 3 months ago, down here, he said that his line in the sand was 3,700. Never took it out. Okay. So, great line in the sand by Larry. And knowing him and his analysis and how bulled up he's been for a while, having a good line in the sand did not create any liquidation. It's going to be interesting to see what sectors, with all the rotation we're getting in the market, what sectors are performing and which are not and lagging. Okay, so that's going to be a wrap. We'll see what happens in the next few days. We have NFP, but for right now, selling rallies is the way to go. Yeah, it takes time. 10-year, Greg made a nice presentation, Forex scale on the 10-year, and it's up a little bit, and I can't dispute what he's saying. And this also could support a stronger dollar and some pressure on stocks as Greg is looking for one more high here. Okay. If you want his exact count, subscribe. But he came in here Friday talking about it. If you were here, one more push up in yields. Okay. And thought that that would generate some, you know, bullish action in the end for another push. And I can't disagree with them. A lot of people are thinking the top's in, and maybe this is a failing rally. Um, but I fade Greg at my own peril, and so does everyone else. So I'm really not doing anything with them. And it's like what I told my mentees, and it's the same for everyone who trades. You may do a lot of your scans and see how things could go either way. But all you really need to do is have conviction about one trade. And right now, my biggest conviction, and I know because there was skepticism when I was talking about it, is that the dollar could be putting in a very important turn for a move back up to 95. So right now, I'm sticking with what brought me to the dance. Yes, Gregor did the week ahead video, and I'm just going to stick with what I have conviction about. Um, you know, S&Ps have fooled me before, but the currencies, I think this was an inflection point. And you know what? I'm wrong under this low. So when you think about it, even if you bought the dollar at 91.15 right here, and you want to be perfect and buy a nice break at 90.80 if it happens, but it's not that much of a risk because the low you're dealing with here is 90.42. So, you're not late because you didn't buy it Thursday or you didn't buy it Friday. So if we're going up here, you're risking from this price level right here about 70 points to make 380 up here. Yes, we have an interview with Larry Tantarelli. So, Blake, good morning. How are you?
Hey Dale, how's it going?
Pretty good.
Happy Monday.
Yes, same to you, buddy.
It was one of those sorry. When my eyes opened, I was like, man, this is like an hour too early. What am I doing? It's like my body is like already knew it was Monday. No fun. I don't like
Yeah.
that.
Well,
So, I know it's Easter Monday, and a lot of
yeah,
if you're if you're
Eastern Orthodox.
Yes, if you're Orthodox, it is Easter Monday, so it is a holiday for a lot of people. So happy Easter for those of you that did celebrate this weekend. I know all of my Greek fellow coworkers, colleagues, and family. Steve is like super religious. He was.
Oh yeah.
I think he's still at church right now, if I'm not mistaken.
I think he's leaving the business for the priesthood.
I think he might be. He could be. That might be the case.
They said he was able to work it out where he could still trade.
Yeah, there you go.
Yeah.
So anyway, I really
Father.
Bless me.
Yeah, there he is. Hey, Steve. It's actually interesting. First of all, I want to point out that that if you guys think that stocks are going down right now, I want to reference the levels that we were talking about last week, and the 4170 level, 4100, and they are all holding. Even on Friday at the end of the month, and we had the end of month flows. We had a lot of dollar buying come in. That's all reversed today. We've seen some dollar selling as equities continue to be stronger. One of the other things that you have to respect is look at cryptos. Ethereum continues to rally. I don't know if you guys know this, but do you know who's going to be on Saturday Night Live? On
Elon Musk.
Elon Musk, yeah. And the reason why I know this is because my wife owns this Dogecoin, whatever it is, and she's just like, yeah, he's gonna do a skit on Dogecoin. I'm like,
oh my God, yeah.
But you know what that means is no one's selling between now and then.
Of course.
As silly as it is what it is, right? So
it is quite amazing to me that everything around Elon Musk is the epitome of what a cult is. And people are not scared about it. Everything about, if he comes out tomorrow and starts tweeting about the benefits of farting in public places, it's going to be a thing immediately.
Well,
immediately it's going to be like, oh my God, why did it take us so many years to realize that this is what we should be doing?
Yeah, and you know the thing about it is it is the market where we're at right now, and the thing is you got to respect it. And the thing I just want to point out is risk appetite is not going to falter when you have these, you know, cryptocurrencies continuing to go higher. I know Bitcoin's kind of stalled out, but Bitcoin is like your grandpa's crypto. It's not what's cool right now, right? It's not, you know, Bitcoin is not like what is, you know, um, uh, what's in, you know, Litecoin is in, Ethereum is in, you know, Dogecoin, all these other altcoins. The bottom line is money continues to push into these markets, and into, as long as they're pushing into those markets, it's going to keep asset prices elevated. And right now you can look at the S&P and we're just holding out. We're near all-time highs. We were just having this discussion in the chat room about, you know, about seasonals, and, you know, we are in the month of May. Typically the month of May will be a bad month for the markets since, like, you know, the last 30 years, since 1989. We've you know, Mays are a struggle. That doesn't guarantee you that things are going to be bad this year. You know, the markets are on an all-time high, and they are like literally high. I mean, like high, like smoking dope high, but also elevated high. And when you have prices that are up at these levels and there's no end in sight to, you know, monetary and fiscal policy expansion. And when, you know, the Fed chairman last week on Thursday said, hey, you know, or on Wednesday, hey, you know, he's still dovish. They haven't even begun thinking about talking about tapering. Those are all clues that, you know, markets are probably going to stay elevated. No one wants to fight the Fed right now. But there are things that, and most people that listen to the Forex Analytics webinars throughout the course of the day, and just so you guys know, we do have webinars that we do broadcast after this. We do the Morning Edge, where we do the bias chart, and we go through all of the major instruments. And then, you know, we also have the Daily Roundup and the European Crossover, which is hosted by Paul Franco. And, you know, we have webinars throughout the course of the day. And one of the things that I just want to make sure that you guys know is we continue to talk about asset prices and the strength of them. And you have to be careful about, you know, about fading them. There are things that I am looking for, and there are things that that I think you should be on the lookout, you know, as we head into the next couple of months. You know, especially when I say the next couple of months, you know, we do have in June, or in June we have, you know, the ECB and the FOMC. That's, you know, their next meeting, where, you know, we might start hearing murmurings of tapering, and that's still, you know, 6, 7, 8 weeks away, you know, depending on, you know, who you're talking to. So, and I mean, which central bank you're talking about. So we are some time away from those meetings, and that means there's plenty of time for assets to continue to rally. As bullish, or as overbought as it may seem, I don't know, Stelios, Steve, do you guys see any reasons to be short the markets at this point?
Not yet.
Other than just speculating?
Nothing has changed, in my opinion. Big picture is still the same. They're going to keep throwing everything they have at it. I think that we need this. We need a catalyst, which will probably be the same as 2018. So I think yields is going to be the catalyst. But at the moment, we have commodities which are rising, and if commodities are rising, then they're going to put pressure, upward pressure on yields. But at the moment, yields are still relatively benign.
Yeah, and look, the market hasn't had any response to yields thus far, and, you know, we've had the 10-year yield continue to strengthen. I think at some point the market's going to care, but as of right now, market doesn't care, right? And so,
yeah, I agree. It's
absolutely right.
It's the velocity as well of the yields going higher. That's what matters.
Yeah, and so if we're just holding stabilizing at these levels and the market can take it in and work with it, then that means that these levels in the 10-year are fine, right? So I'm sorry, Steve, I didn't mean to interrupt you as you were talking.
I'm so offended.
Okay, I know
We're
you're
not
offended.
friends anymore.
I know it's Greek Easter and you wish you were at church right now, but
I mean, you got me off church already, so you might as well torture me.
all right. So what are you looking at moving into this week?
I'm looking to see if there is any chance that this attempt of a reversal on Friday can continue. And I'm going to say what I said the previous time we had some type of an attempt of a reversal, which is unless we see the stock markets follow, I don't think the dollar has much of a chance of extending.
Yeah, and I tweeted this out earlier, via Twitter. So if you're following me via Twitter, I tweeted out and I'm like, this is it, 91.35. Previous support, current resistance, and is a big rejection area. I don't know if you need to be really long dollars while you're below that level. Now, can we break back above that level? Sure. I mean, especially if we're maybe starting a new consolidation, which is entirely possible. I mean, I could do this and definitely make an argument for a dollar consolidation, right?
Mm-hmm.
We could
absolutely. We
could
might
do
be
that.
in a more complex correction.
Yeah,
that might as well be the case.
It could be. The one thing I have to hand it to the dollar, and I'll say this about the dollar: it's holding up really well, despite this continued rally in asset prices. You can't really ignore that. I mean, you've got these cryptocurrencies continue to skyrocket. You've got you've got stocks at all-time highs. You got precious metal. I mean, look at the move in gold. I mean, gold, just gold alone.
Yeah, what is mostly keeping the dollar in check, in my opinion, is the move higher in nominal yields that many people confuse for a move that actually matters, because we have extremely strong evidence that inflation is exponentially moving higher. So the small move in nominal yields matters very little. And another thing that obviously matters is that there is this preconception that probably the Fed will have to ignore, bypass what they've been saying their predisposition is, and act sooner. I think the market will realize that both things are in essence misconceptions. But until they do, I'm not surprised that the dollar is somewhat in check. I think though that once these misconceptions get shot down, the dollar is going to have a very sharp leg lower again.
Yeah, well, I'm actually I don't disagree with you. I actually think the dollar is at some point going to probably be sold pretty aggressively. I think that the dollar's in a cycle. I just think we bounce before we sell off. But that's me, and that's more of a gut feeling more than anything else. But I have to point out, going back to asset prices, the only thing in my opinion that's going to turn the dollar higher is a turn lower in asset prices. So I got to go back to the S&P, and then I got to go back and have the conversation that I had with not you guys, but the Thursday, Friday conversation on the Morning Edge and Daily Roundup. Let me just have it really briefly, and let me, I'm gonna accentuate what Steve has been telling you guys for the last, I want to say, couple weeks. Steve, maybe. I think the risks are increasing that we get, this accelerated move higher. I'm hoping it leads to like a blow off top type of situation. But when you have price action that looks like this, and when you have price action that's just not pulling back, what it does is it traps every short in the market, and it continues to accelerate the idea that there's only one way to go in the market, and that's long. And anybody who tries to short just automatically gets stopped out. And then you have the the FOMO characteristics that come into the market, which is the fear of missing out, because I'm an asset manager, and if I don't beat the S&P, I'm just going to really I'm going to have redemptions up the yin yang, and I won't have a fund moving forward. So I have to be involved. I have to be long equities, and everybody's long everything. And at some point, that will fail. But usually you have to have some sort of accelerated move higher. And Steve's been saying this for the last couple of weeks, if I'm not mistaken, Steve. And it's something that I've always imagined was going to happen. It's just like, but timing's everything, right? And right now, I mean, all we're doing is grinding higher in the S&P and in assets. But when you start grinding in one direction, that's what really starts to increase the risk of this happening. Because we're not even getting volatility at this point. Like we're not even getting a sell-off. Like we're not even seeing more than like a 0.5% correction at any given time. So Steve, do you want to continue, or do you want to expand on what I just said before Dale takes over here?
I don't have something to add. I mean, you covered everything I've been saying. I think it's the one missing element, and without it, we can't do anything.
Yeah, and let's take a step back for a second and just look at the last, couple months of price action. Just the last couple months, there are zero pullbacks.
Zero, literally zero.
You have no two-way market. And unless there's a catalyst right now, or, here in the, next, whatever, I mean, unless there's like, let's say China, tries to take Taiwan, or Russia takes Ukraine, something like that maybe will spark a reversal in asset prices. Barring any instance out there, we are grinding higher, and the longer and the higher we grind like this, the more the risk, or the higher the risk of an accelerated blow off top is, because there is no other direction. Like you can't even, Forex Gal says sideways all summer. How the hell are you going to go sideways? You tell me. How do you go sideways when we can't even get a pullback? There's constant money being put in the market. Do you not understand that? Constant. There are no pullbacks. So you're going to end up getting a situation where it's just going to grind out until it just starts accelerating. I've seen this. I've seen these before. I've been in these situations before. So I don't know, Steve, Stelios, anything else you want to add to that?
Nope, you covered it. I want to add one other thing, completely unrelated though. You guys have, I don't know if you guys have heard, there's this silver squeeze movement on Reddit again. Did you hear about it?
Oh, no, I don't read Reddit like you.
I have tried to be, I'm hip, I'm young. No, I'm young. I'm turning 50 in August.
Exact opposite of that, by the way.
But anyway, what they're doing, the Reddit crew, what they're doing is they're trying to squeeze silver. Remember they did that in February, and they tried, but they're learning now, because in February they all bought the SLV ETF.
Yeah,
which the SLV is completely unallocated. Yeah. And actually what happened, there's record inflows, right, onto this ETF, and silver spot went down the next day like 5%, which is completely because they just flooded the market with paper silver. They screwed it. So now what are they doing? They're all buying physical, and they're buying PSLV, which by the way is the one I own for a while now. which is 100% allocated. And look what's happening today in metals. And this is not.
Yeah.
They're
This
really
has the
trying.
potential of actually indeed causing a squeeze.
Yeah, they're really trying this time. They're trying the right way. So we have to be aware of that.
Yeah. Well, that's okay. Well, if all assets are going higher, one of them that's gonna follow is silver, and then you're gonna have gold as well. You're gonna get these. You're gonna get a rise in all asset classes. It's not singling out anything, right? So.
Oh yes.
Yeah,
Yeah.
I could see very easily silver making a run back to 30 easily. So why not? So anyway, Dale.
Yep, I'm here, buddy.
It's
Is
your
your
time,
guest
man.
here?
Our guest
Wait,
is here.
wait. It's your time, but before you take over, we have something kind of exciting to talk about. Trader Summit. You guys maybe remember 6 months ago, I guess, was our last. We did a big event where we had speakers and tradersummit.net, and you guys are going to start seeing a lot more of this. And I'm going to go ahead and put this link here in the chat box. This is here you guys go. You're going to start seeing a lot of articles and a lot of interviews and a lot of ideas and analysis and education being put right here. Like all of our contributors that we've been working with for the last 5+ years. There's a lot of them that are going to be, putting their analysis and their views up on the site. So, we just want to have one central area for you guys to all be able to go to and be able to find good, actionable ideas. So, just be aware that this is launched and it's going to be beneficial to you. Just having it.
Keep in mind, guys and girls, that it's a first version. We're going to keep enriching, content, abilities, and everything else. So it's,
it's still in its infancy.
Stay tuned for, more things being added over time. Quite a lot, actually. We have big plans.
Yeah, and so thanks, Steve. It is the first version. There are going to be some, there's some links that don't work. There's things that are, dead areas there, but we know about them all. Unless you have like a catastrophic error, let us know. But anyway, Dale, we should let you take over. Thanks everybody for tuning in today, and you guys enjoy. All right.
Thank you, Blake.
Thank you, mate.
Thanks, guys.
Larry, welcome back to Face. How are you, my trading warrior brother? How's it going?
Dale, good morning. Good. How are you doing?
Good to hear your voice, Larry. I want to acknowledge at the beginning of the interview, I was telling the attendees that last time we talked, I always ask people that are bullish, what was their line in the sand? And you said 3,700. And I think we got down to about 3,730 during, a correction. Just a pullback area, never took out 3,700. So great technical area to keep you long. You laid out your red line, never crossed it. So very good technical call on that, Larry. Want to acknowledge it.
Thank you,
I
Dale.
bet you didn't think I remembered that.
No, I know you remember everything. You're sharp. Nothing gets past you.
All right. So anyway, God, we've had a tremendous rally since that pullback in the market and pushed the 4,200 handle. So if you want to share your screen, the only thing that, really keeps coming back to me is like last week, the NASDAQ barely made a new high. I don't know if AD is still not confirming the advanced decline line, and the Russell hasn't made a new high in a long time. Are those flies in the ointment to you at all?
Not really. I think if there was some type of a pullback or a consolidation here, it wouldn't surprise me. And I talked about this over the weekend. The way that these uptrends work is the markets will make a new high, but then they'll pull back and then they make another new high. So, NASDAQ you can see my screen, right?
Yes, got the
So
Qs
triple Q's had a pretty strong run. So from 310 to 342, I believe, in anticipation of some strong earnings, which came out. And, so if there was some back and fill right here, but overall, as I go through, all 11 sectors and I look at these leading stocks, there's a lot of breakouts and a lot of really big stocks that while in the short term, they can always pull back, but longer term, I mean, that triple Q chart is a strong chart.
Okay, yeah, I noticed a tweet by you. I think I retweeted it. Like, you talked about all the constructive things that were happening in the market. Do you remember that tweet?
Sure.
And what were all the things that were going on that when you're a little bit in doubt about how much further the market could go, maybe you could list those things for our viewers and
The key
attendees.
thing that I see right now is the strong breadth just across the board. On
Okay.
last Thursday, there were 187 large caps that made new highs, and that's the strongest number that I've seen in a long time. But there's a lot of, I mean, if you look across the board, I think 9 of 11 S&P sectors made new highs over the past week and a half or so. So industrials broke out, and metals and mining, XME, I know that's a market that you follow a lot. That broke out. Materials broke out. I mean, if you just go across the board, you can see even real estate. And I don't follow REITs, but real estate's been strong. The key thing is the financials. Even when bond yields pulled back, the
Yeah.
financials continue to break out. So just as I go from sector to sector to sector, I just see charts that look like this, strong uptrends breaking out.
Okay, so 37 was your line in the sand. Now, I'm assuming as the market continued to progress and make new highs, do you bring up that area? Would say 4,000 mean something to you, or is 3,900 now? Do you move up your line in the sand?
Yeah, 3850 is the key number right now. So as the market's moved up 4,000 in the near term, and I posted when the market broke 4,000, there was no overhead resistance, and we've
Right.
seen the same thing with Ethereum in the past few weeks, 2,000, 2,500, and now 3,000 broke. But once it broke 4,000, it's just kind of, there's been really no trap sellers overhead. But 4,000 in the near term, if there was any meaningful pullback, 3,850 is the number that I would want to see hold.
Okay. Thanks for that number.
Sure.
What are you seeing as far as energy? It's been one of the leaders and continues to be, doesn't it? I mean, it's had one of the best rebounds. That's
Absolutely.
something else breaking out.
Yeah, I'm still long energy. It's the leading S&P sector year to date. I think it's up 30%, 35%, something like that. There's a few charts in the group. So EOG, they've got earnings coming up, but you can see this is pretty solid over 66, right
Yeah.
near a breakout level. Hess reported earnings last week that already started to break out. Diamondback Energy, this has been a strong one. That's, so there's quite a few charts that are right near, right at the high end of their range, that if some good earnings come through, I think they can break out. What I really believe is I believe that the main driver for energy is going to be 10-year yields, because I've seen a pretty strong correlation between bond yields and energy over the
Okay.
past few years, and I really think that what happens with 10-year yields is going to dictate what happens with energy. But yeah, I'm still long.
All right. So say we have one more high in 10-year
I
and
think
we're not
XOP,
backing up. That would
yeah,
be bearish
no, that would
for
be
the.
bullish for energy.
Okay. All right.
Yeah.
Okay.
So
So a pullback would be, take some of the inflation fears out of the market if we had a pullback.
yeah, and
Like,
I think that's kind of happened, because if you look at when,
right.
so XOP topped out mid-March, near term, and if you take a look at treasury yields, mid to late March. But I think that XOP, if we get the inflation that the market seems to be pricing, and I think energy is going to do good.
How about the semis, Larry? With you have some fundamental issues with them. They came off a little bit last week, lower peak, holding your red moving average there. Let's at the 50-day.
Yeah, the 50-day.
To say if we took out 236, would your view on semis change?
It would a little bit if it took out 236 looking at the chart, but I think what I think you'll see here is I think that they'll break out to the upside. I'm long in a couple semis, and now semis also had a pretty big run, so 216 to 257. So any consolidation in that mid 230 area would make sense, but I'm still long. And you know what it is once the media started to do these TV shows about the semiconductor issue, is when they started to pull back, which often happens. But what I saw here was money moved into some of the higher beta, like the cloud names, and semis pulled back. But I think the next major move in semis is to the upside.
Okay. Any other sectors or groups that we should be paying attention to? You know, I see one fly in the ointment, and it's not really embraced by the market.
What's that?
I think that we may have had an inflection point in the US dollar, a low put in last week. And do you think the market, if you knew there was going to be, say, you know, euro pull back to, you know, 115, you know, about 5% or 6% from here, what groups would you be in with a strong dollar? And if I'm right about this, and it's only a bear market rally at this point, what I'm looking for, but 95 in the Dixie, how do you think the market would respond? Would it ignore that, or could that be part of a correction or a risk off move around the corner? Because the
Normally,
dollar, normally it's more constructive risk on wise when the dollar's falling.
correct. Yeah, well, because what happens is because the
The
dollar is the ultimate
multinationals.
safe haven asset. So in
Yeah.
times of
Well, I mean,
stress,
how does UUP look to you? I know you look at ETFs as well. Are you
I do. I really don't do anything with the dollar.
okay? See
So
what I
so
mean?
for me, yeah. So for me, from a trend perspective, UUP isn't anything that I would be involved with right here. But it doesn't
Okay.
mean it can't go higher. But I would want to see it. I tend to focus more on the stuff that's trending into the upper right hand corner. So
Okay.
there's a lot of things that I'm focused on here. So the banks are very strong, and I've got to say I'm positioned. I'm more spread out from a sector basis today than I've been, since I can remember. So the banks look good. If you take a look,
What
Freeport.
looks? Nothing looks bad.
Ah, yeah. You know
Well,
what looks bad is
what?
these spec stocks.
Me on Monday morning, Larry.
Nah, you look great. You sound great. You look
Uh,
great. But you know what? What looks difficult to me? So these spec stocks,
the
and I think
stay-at-home stocks.
not the ones that aren't profitable. So Teladoc, I think they've lost. They ran up quite a bit, but it started to break down. If you look at these SPACs are great. I think
Oh,
for
SPACs.
shorter term traders that
Yeah.
that are good at this. Pharma is a little bit difficult right now. So if you take a look, for example, at Merck, it's a little bit more difficult. But for the most part,
Wow.
I will tell you this. I think I was neutral on these mega caps for, I don't know,
Yeah.
4 or
Yeah.
5
They
months
did
now.
nothing.
Yeah, but they've broken
Amazon,
out.
same thing. And
Yeah,
then yeah.
they've broken out, and I think that this breakout, I think that this is the start of a new leg higher. And what I think the market is doing right now is I think it's starting. Once bond yields started to shoot up, these SPACs and these spec stocks they got cut in half. And I think what the market's doing is I think it's rotating into the higher quality names that are making money right now. And these lower valuation tech stocks. I mean, HPQ. This is a stock that nobody talks about, and
Is
it's
it
up about,
Hewlett Packard?
yeah, Hewlett Packard. It's up about 38% year to date. And if you take a look at that uptrend,
It's a nice, yeah.
yeah,
Nice
if you
trend.
take a look at Dell, these are stocks that nobody's really focused. $75 billion market cap.
They were
And these are,
popular stocks 20 years ago.
yeah, this is the revenge of the year 2000. Oracle, even
Okay.
yeah,
Yeah.
even Cisco.
Interesting.
And Cisco kind of fell off the grid, but Cisco recently broke out to a
Huh.
multi-year high. So what I think you're going to see from the market is I think that it's definitely spreading out, and most of the industry groups that I'm looking at are set up pretty well. You know, even these travel stocks, if you look at MGM Resort, this is ready to break out, you know, right where it is.
Okay, so but basically you don't have to be a rocket scientist to know that we're having some success, a lot of success actually with um, COVID and vaccinations and the opening up trade. And I'm thinking it's going to be a mob scene everywhere this summer from people feeling the
Yeah,
confinement,
from, you
which
know,
makes
just
me
from,
want to confine myself again. First it was COVID, now everything's going to be overrun
yeah,
with
you know,
people.
from talking to my friends there, and even, you know, my wife, they all they want to do is just travel, travel, travel. And I'm not going to go, you know, over the deep end and just, you know, travel all the time. But I think there's a lot of pent up demand. People definitely want to get out. But even, you know, if you take a look at building materials and the
Oh
home
gosh.
builders,
Yeah.
strong. I mean, this is, you know, this is CMAX, and I talked about this weekend. But this, yeah, I mean, you know, strong uptrend. If you look at something like Carrier, that just started to break out. So really what my focus is here is spread out. I don't have any giant overweights. Last year, you know, this time last year, I was basically mostly large cap, mega cap tech.
Right.
And
Right.
you know, I really spread out to where I don't have, you know, I've got eggs in a lot of different baskets because I see a lot of different breakouts, and you know, there's some strong charts.
And generally that's interpreted as bullish when it's not just one stock, one group carrying the market.
Right.
Anything overseas that you like?
Um, Off the top of my head, I'm just taking a look at my list. So
Not
a
that you don't
lot,
have enough,
yeah.
things that you
So
like.
a lot of these, I like the industrial metals. So Vale, Rio Tinto, BHP. You know, those are all pretty strong.
Okay.
In the tech space, in the growth space, I think C is the strongest in the group. The China Internet Group, you know, that's been under a lot of pressure, so it's been kind of tough
Baba.
to
Yeah.
find an even JD start to break down. But C has really been the standout. And then yeah, there's a lot of these like Train, that's been strong, you know, in building materials, but it's just really spread out. Europe, the European market, I don't focus too much on Europe, but Europe's been strong. The banks were doing pretty well until last week. Barclays got hit, but yeah, I see a lot of uptrends.
So everyone thinking about sell in May and go away. It hasn't worked for years. We have another year where sell in May and go away means that if you do it, the only thing that goes away are your clients.
You know, that's a good point, and it's a good question, and people ask me about it a lot, and I don't buy into any of that stuff, whether it's good or bad, because what I just want to do, I just focus on what the chart's doing right now. And I found that, you know, when people start to buy into whether it's, you know, they should sell it now or they should buy it now, you don't focus as much as what's on the chart. I do think that if the markets pulled back, uh, you know, 3 to 5% at some point wouldn't surprise me whatsoever. But you know, when you look at these charts, I mean, it's hard to argue. Now, if the trends started to roll over, but they're not, you know, they're making higher highs, higher lows. They're above the rising moving averages. So when you see charts like that, it's tough to find a little bit of fault. You know, it's tough to find fault with them over the intermediate term.
Okay, well, some great looks, Larry, and some nice calls. Anything else you want to share with us today before you go to your website and people know how to, get a hold of you for individual issues that you're monitoring and recommending?
No, I think that's about it for the most part. Just really, you know, the fact that I'm spread out. I don't make these big calls. You know, like I'm either, you know, 200% long or I'm 100% cash. I just, you know, I spread the bets out. I manage my risks and I look for the strongest idea. I do think these FANG stocks. I think this breakout into FANGs is for real. And on any type of pullbacks, I am planning to add to those positions.
Yeah, Google had great earnings. What are we doing? Trying to pull back and test that big day it had. What are the big earnings stories this week? We had Apple last week. Maybe you have any, most people for years, Apple was a core holding. It's been underperforming for a long time. You have any view on it, Larry? You're not long Apple, are you?
I'm not long Apple, and Apple's a solid company. I think the stock will do fine, but it wouldn't be, we can't own everything, and
Yeah.
it wouldn't be my first choice. I think that Facebook, Google, Amazon, and Nvidia, I think have stronger charts. But Apple, like if I held Apple, I wouldn't sell it. But if I had to buy a stock today, it wouldn't be the highest one on the top of my list. I think that Facebook, of all of those big name stocks, I think that Facebook might have the most upside along with Amazon right now.
Okay, the advertising model is still generating amazing things for Google and Facebook. And why don't you take us to where people could follow your individual issues and things that you're looking at? There's Amazon. Yeah.
Yeah, and the Amazon, if you look at the Amazon weekly, this right here on Friday, that's
Yeah.
an all-time weekly closing high on a lot of volume. So
Going
while
back to
going
last
back,
fall.
yeah, that's a 10-month, a 9 or a 10-month breakout on a
Yeah.
lot of volume in a pretty big stock. So I think that that's definitely a bullish breakout, and I think that's set up pretty well.
All right, Larry, another great roundup of your work, and the bull market's still on. I know a lot of people. I actually interviewed a guy who thinks we could go to 4,700 before there's any problem in the market, and some of my associates here are saying that we're getting close to where instead of having a correction, we really have a melt up. Do you think that could happen and we go parabolic here?
It's I try not to make the big market calls, but I will say
Yeah.
as strong as the breakout's been in the S&P, there's just nothing over the top of it. So
Yeah.
it wouldn't surprise me.
Okay. So Larry Tentarelli, you could find him at LMT 978, right?
Yes, sir.
And here's Larry's website where you could find him.
Yep, bluechipdaily.com. And if you take a look on the top performers page, you can walk through just, a ton of market calls I've made for members and trade alerts that we've put out over the past year.
Okay. Any crypto stocks that you're interested in?
Now, I've got some Bitcoin and I've got some Ethereum. That's really all that I follow. And I don't trade them. They're longer term, small positions, just longer term. But as far as the stocks, the crypto stocks, I looked at Coinbase and it could do fine, but I don't have anything there. But I've just got a little bit of Bitcoin and a little bit of Ethereum.
Okay, well, a little bit is better than none.
Oh yeah,
in this environment.
It's going to be a lot bigger, over the past few months.
Well, Larry, I want to thank you again, my trading warrior brother, for coming here every 3 months or so and filling us in, and talking about how you're allocating in the markets. And this is the most spread out I've seen you, and it looks like every group is just really the breadth is great in the market. I think the only segment of the market where you're not getting great breadth is NASDAQ, isn't it? The advanced decline, is it confirming when we made a high last week? Because I know prior it wasn't. So I'm just curious about the AD before I let you go.
Yeah, under the
NASDAQ.
surface, there's been a little bit of distribution in the
Okay.
NDX, and it's been what I saw in the past week was a lot of money went into the mega caps. And when I look, for example, like at the mid caps, the mid cap tech charts right now are pretty weak across the board. So there's definitely been some money going into the mega caps over the past week or so.
All right. Well, thanks again, Larry, for taking time out. Have a great week, and I hope you know, all your positions work, and when they don't, you have the money management skill to know where you're going to come out of it. And that's 38.5 in S&Ps. The picture would be changing for Larry Tentarelli.
Dale, thanks a lot. I always appreciate it, my friend.
All right, buddy. Good hunting. Everyone, don't just count your shares, count your blessings, and we'll see you tomorrow for Turnaround Tuesday. Thank you for being with us. Adios. And you could join the team in 20 minutes for the morning edge. Do that.